Hello traders, what's going on? In the previous lecture, I have completed about the basic formation and characteristics of hammer pattern on a price action chart. From this lecture 1, we will learn another strong candlestick pattern, that is the Hanging Man Candlestick Pattern. So in this lecture today, I will be talking to you about the basic formation and characteristics of Hanging Man Candlestick Pattern on a price action chart. Hanging Man Candlestick Pattern is a single candlestick pattern that if formed at the end of an uptrend. It is a bearish reversal pattern that signals that uptrend is going to end. So let's start. Hanging Man formation like the hammer. It is the bearish reversal candlestick pattern. It has created when open, close, high and low are almost same, and there is a long lower shadow and a small real body. Both bullish and bearish bodies are formed but provide the same direction by appearing at the significant resistance level or swing high. Let's see the example. As you can see that the bullish trend has formed before this pattern appeared. Price moves higher by creating higher high. At the sudden period, selling pressure forced the price low, but after few moments price goes to up. At the end of the candle close, as you can see that Hanging Man pattern has formed at the top of a price action chart. That means opening and closing price high and low are almost same, and it also creates long lower shadow and small real body. Two types of small body has formed. There is a bullish body and bearish body, but those type of body are same direction by appearing at the significant resistance level. So this is the valid Hanging Man formation. When a rally of bullish candlestick rises up and current bullish candle closed, and instead of the new candle forming at the current candle closing price, a new candle open at the few pips above the previous candle closing by creating price gap, and then the candle turned into the bearish candle by falling below the previous candle body, and the candle closed when open and closing price are almost same on a price action chart. Then this candlestick pattern is Hanging Man Candlestick Pattern. You will find this pattern at the top of the market price. In this moment, you can trigger a short trade which set the stop loss and target profit and get some sweet profit. Let's see the real chart example. As you can see, this is USD JPY 4-hour chart. You will notice that the Hanging Man Candlestick Pattern has formed at the top of a price action chart. Market trend has downward direction. Price fall down by creating lower low. At the sudden period, buying pressure forced the price high, but after few moments price goes to up. And the end of the candle close, as you can see that Hanging Man candle has formed. You will trigger a short trade entry and set the stop loss at least 3 pips below the previous candle and set the initial profit target at least twice size of stop loss. It's very easy and simple to find the chart. Now if a Hanging Man candlestick pattern appear at the top of a chart, that chances is huge that the market fall down, since this candlestick pattern trend to act as a trend reversal pattern on a price action chart. So not more today. Have a nice day. Goodbye.